Hey everyone, Coach Investor back to another Lemonade video for today. So now that we are at a 52-week low for Lemonade, maybe it's time to revisit the reason why we're invested in this company. If you're in it for the short term, this is definitely not a stock for you because one, it's still very, very early on, still a very young company. And right now valuation obviously is expensive. I believe it's trading at 30 times sales. So obviously not that cheap. And if you solely look at the graph, the stock price, you'll probably say that the company is going out of business. But actually, no, because as most of you know, some of you probably don't, but most of you know that the stock price does not always reflect how a company has been performing. So in this video, we're going to revisit some key numbers, one major announcement that the company has made this week, look at the total addressable market for car and pet insurance, because this is obviously, in my opinion, two segments that will propel this business to higher highs business-wise, not stock-wise in the short term, but in the long term, yes. Then at the end of this video, we're going to have a look at the graphs. So if you want to skip that, timestamps will be below. All right, so I'm here on hypercharts because, well, visually it's much better. So you see market cap 3.29 billion, trailing 12-month revenue 107.9 million. The multiples, as we said, 30 times sales, and then revenue growth of 100%. Now, if we look at it visually, this is the customers. You can see this is exactly what you want to see with a growing company, a staircase on the way up, not on the way down. Now, if you look at revenue segment, then here, if you are not following the company, you might ask yourself the question, what has been going on here from Q2 last year to Q3? Well, like I keep on saying each and every quarter, this is when the reinsurance agreement has come into place. But since then, you can see again, staircase on the way up. And yes, you might have guessed it, the company is not profitable, nowhere near profitability. And this is something that has to be known for investors, especially short-term investors. The company is not going to be profitable in the short term. But for long-term investors, you really need to focus on what the company is trying to do right now that will have effects for the long term. Now, if we're talking about car insurance, for example, we have to talk about the total addressable market for car insurance. The car insurance industry in the United States solely is extremely, extremely big. As you can see right here, right now, the automobile insurance in the United States market size is $311 billion. Now, since 2016, it has seen an annual growth of 2.3%, so not as high as other markets. And then in 2021, it has grown only 0.7%. But look at this number, $311 billion. Let's say that Lemonade takes 1% of that. That's $3.1 billion. That's almost as big as their market cap right now. And that's just taking 1% from that $311 billion. Now let's go and look at the other segment, which I like very much, which I believe is one of the main reasons why they're so successful in growing those segments and in bundling those as well. And that's pet insurance. As we can see here, pet insurance is expected to grow globally at a CAGR of 15.65% and reach $11.84 billion by 2027. Now again, if Lemonade only takes 1% of that, that will be equal to $118 million. Now let's have a look at the US market. That one is expected to grow at a CAGR of 10.9% from 2019 to 2027 and reach $2.54 billion. Now again, taking 1% out of that is $25 million. Now again, this is being conservative, taking just 1% of the pet insurance market, 25 million. If you want to take 2%, that suddenly bumps it up to 50 million. And by the way, with insurance, if they're doing a great job, this is all recurrent revenue. So it's like a subscription model where every year analysts, investors can just calculate future revenues based on the amount of customers they are right now, then base their models on that, which is much easier. And that's why investors and analysts actually love subscription-based models for company, because they can project future growth. Well, it's obviously not certain, but it's way easier to calculate that. Now, before we go into the graph and the big announcement, I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 free stock picks from their popular product, Stock Advisor. Now, Stock Advisor has beat the market by more than 4x. So all you have to do is go to fool.com/couchinvestor to get your free 10 stock picks now. So Lemonade has a new chief claims officer who is coming from USAA, where he worked for 27 years. Since 2015, he has been the chief claim officer there as well. Not only is this a great move for Lemonade, but this just shows you that yes, legacy insurance companies might be losing their top and veteran employees to a startup like Lemonade, because he even said it here in a short blog post. I fell in love with what Lemonade stands for: customer centricity, social responsibility, and moving faster than anyone else in the industry. Launching car insurance from scratch in 12 months. Are you kidding me? And he continues, add to that the company's unbelievable growth with even more potential for the future and a knack for handling many claims in mere seconds. The list goes on. And beyond the visionary tech leadership, I'd be following a line of veteran insurance executives who have jumped ship into the 21st century waters of Lemonade. And he continues by saying that the industry is at a true pivot point where the ability to rapidly scale both products and services in a digital native world will determine winners and losers. Getting a policy and settling a claim, things that used to take days, weeks, and even months, must be done in seconds now. Customer demands it and deserve it. This is something that legacy insurance companies probably cannot promise you. And last thing, he has been in the industry for a long time. It's finally embarking on a transformational changes. Think telematics, car insurance, we've seen that with Tesla as well, that I'm not sure all legacy carriers are ready for. Lemonade is in the perfect position to leapfrog many long-standing carriers, and the company has already proven they know how. To me, this is another great piece to the Lemonade puzzle. Adding someone that has been in this industry for 27 years is certainly a big positive, and especially in that role. With claims, we know that their loss ratio right now is pretty high, which is a bit normal as a young company launching new products, but maybe in the future he will have a positive effect and will lower that loss ratio. Now let's go and look at the graph and conclude this video. Alright, so looking at the graph, it doesn't really look great, right? Clearly on the downtrend here, we saw a little pop when they announced car insurance, but then after earnings, the acquisition of Metromile, obviously the stock has taken a hit. The whole growth market has been taking a hit as well. RSI almost oversold. Momentum nowhere near on the uptrend. We're now clearly on the downtrend. Why did I put $45 in my thumbnail? Because, well, I think that $45 could be a support if we were to go even lower. Right now, I would like to see the stock just forming a base, going sideways, and let valuations catch up. And then in the future, we'll see what happens. So to conclude, to me, the only thing that has changed is the stock price. Yes, there was major hype back in January, but not just with Lemonade. If you look at most growth stocks back in January, February, everything was flying super high. Right now, most of them have taken a huge hit and are on the way down. So to me, the only thing that has changed is the stock price, because the business itself has actually become much better. And I do believe that in the long term, valuations will catch up. The business is just going to become better and better over time. So I don't really care what happens in the short term. In the long term, I personally believe that Lemonade is going to be a winner. Obviously, I could be wrong, but this is just my personal belief, and that's why I'm invested in this company. Now, I completely understand those that do not want to invest in Lemonade because they think it's expensive, because they think it's never going to work, it's just insurance. Fair enough, then just don't invest in that company. It's pretty simple, no? So that will be it for this video. Let me know down in the comments below what you think about Lemonade for the long term. The short term, don't really care. Maybe you are playing the options game. Let me know down in the comments below. And if you like this video, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.